Hello and welcome to this IIAC Open Banking webinar presented to you by Questrade. Just to let everyone know, this is being recorded, so we all have to be on our best behavior. I'm Annie Sinigagliese. I'm a managing director at the IIAC. I'm also in charge of its FinTech committee, along with my colleague Susan Copeland. And first, I want to thank the speakers. So thank you, Christine. Thank you, Éloïse. Thank you, Steven, for agreeing to do this. It's very nice of all of you to share your knowledge. I would also like to thank Questrade, Mary Joyce Impensando, its Chief Compliance Officer, Julie Mancy at BLG, and Maria Nash here at the IIAC. So without you, this is not possible, so thank you all. And now to really get things going, let me introduce you to our moderator. So he's back by popular demand. He's the president of Fidelity Clearing Canada, and he's also the chair of our FinTech committee, Mr. Scott MacKenzie. Scott?
Oh, thank you so much, Annie. You actually stole like 2 or 3 of my lines, so this is perfect. You really appreciate the introduction, and thank you to all of our colleagues at the IIAC and the IIAC subcommittee, FinTech subcommittee, for creating this forum. It creates the opportunity, it gives us the opportunity to explore and learn about important initiatives that are helping drive our industry forward. I do also want to echo Andy's comments and thank our panelists today for participating, for sharing their knowledge, and for helping us understand the concept of open banking and what it could mean to us. As Annie said, my name is Scott MacKenzie. I'm the chair of the FinTech subcommittee and president of Fidelity Clearing Canada. And I'm really honored to be able to host the panel today and learn through the discussion that we're about to have. Open banking, like many new concepts and innovations, has created both an industry and new language that can both confuse and overwhelm. There's an alphabet soup of acronyms like API, PSD2, PISP, TPP, and even CDR that surround what at its core is a fairly simple idea of giving consumers more control over their financial data and creating a safe and secure way for consumers to access new products and services in the hopes of creating efficient and improved financial outcomes. Today's panel will hopefully help demystify some of this confusion, but equally important, will give you insights into how open banking is evolving and what benefits and challenges may present themselves as open banking becomes a reality in our market. I have a number of questions that I think will help us achieve this purpose, but we're also open to questions from you, the guests, and please use the Q&A feature in the webinar to submit questions, and I'll work on weaving those into our discussions. With that, I'd like to turn it over to the panelists for some brief introductions and maybe some interesting kickoff background on this topic. Steven, I'd like to start with you, and if you could please share with us your background and maybe set the table a little bit with an overview of open banking, or as it's also known, consumer-directed finance.
Thanks very much, Scott, and thanks for having me. Delighted to be sharing this panel with my 2 esteemed co-panelists. My name is Steve Boms. I'm the Executive Director of the Financial Data and Technology Association of North America, or FDATA. FDATA is a global organization that is advocating for implementation of open finance regimes globally, with our roots in the UK and Europe, but we have chapters in Australia, in South America, in Asia, and really across the globe. And our members are FinTech firms, data aggregators, who have multiple different types of use cases. They're different maturities, they're kind of different sizes. The one thing that they all have in common, though, is in order to empower their customers to improve their financial well-being, they depend on access with permission to those customers' data held at financial institutions. And so, Scott, you asked really what is kind of the baseline question here, which is what is it that we're talking about? What's the difference between open banking and customer-directed finance? Open banking is had its roots in the UK. And in the UK, which then was part of the European Union, PSD2, the Second Payment Services Directive, went into effect. And PSD2 in Europe said that payment accounts must be portable. The UK said, if we're going to do that anyway, if we're going to make payment accounts portable, why don't we implement a regime where for those accounts, there's complete customer control over that data. There's data privacy and data security on the one hand, but data empowerment on the other hand. And so open banking is the democratization of that kind of data, but purely focused on payment accounts, right? Because that's what PSD2 was limited to. When we think about what we call open finance, but also could be thought of as customer-directed finance. Really, the key difference is it's the totality of financial accounts and financial data that you as a customer interact with, regardless of whether it's a payment account or not. And from the FData perspective, we would say it shouldn't just be limited to consumers. It should be for small businesses as well, such that whether you're going to use an advisory account, a checking account, a savings account, a credit card, you have the same rights and the same ability to use whatever provider you choose to improve your finances. So a very kind of simplified explanation, Scott, but that's kind of the baseline and the difference, and happy to be on this panel.
Thanks so much, Stephen. We really appreciate your involvement. Éloïse, if I turn it over to you, Stephen mentioned the roots of open banking in the UK, and certainly those that have followed this topic know it's evolving differently in different markets, and Canada is sort of on its own journey. Would you also please introduce yourself and just give us a sense of how it's evolving and maybe some perspectives on what's happening in Canada?
Sure. So I'm a partner at Borden Lanner Gervais. So I'm the co-leader of the privacy and data protection team. So we're about 10, 12 lawyers assisting clients from different industries, many of them financial institutions or involved in open banking, investment firms, and so on, navigate and comply with privacy laws. So it used to be that complying with privacy was really kind of I would say an internal compliance exercise, right? You have a list of things and you have an external privacy policy check, and you're good to go. But things are evolving. There's more and more data sharing between businesses. And in the context of open banking, there's definitely more personal information being exchanged between more legal entities, sometimes across borders. So if we look at privacy laws in Canada and how these laws have evolved, I would say that perhaps we can think of privacy laws in Canada being between the U.S. laws, so more stringent than what you have in the U.S., and probably not as stringent than what you see in the EU, for instance. So we have a federal law in Canada called PIPEDA, so Personal Information Protection Electronic Documents Act, which applies across Canada unless a province has its own law that was found as being substantially similar. So far you have Quebec, BC, and Alberta that have their own laws. So for a firm involved in open banking that would have businesses across Canada, they would be subject to these 4 laws, which are quite similar and probably very much aligned with what you have in Europe. Again, not as stringent, but close enough. So these laws are enforced by the Privacy Commissioner of Canada and their provincial counterparts. Sorry about that. They are usually based on consumer consent, on transparency, on data security. So consumers interacting with firms in the context of open banking would have certain privacy rights. So they would have to have access to their information, update their information, withdraw consent, and so on. In terms of risk, and this is where we're not exactly aligned with Europe. The risk is of a fine is minimal. So usually it's more of a reputational risk. So you have a lot of companies that are in the media because they've done something they shouldn't have. There's a security incident and so on, in which case a privacy regulator in Canada would launch an investigation. So it's really, we're more talking about a reputational risk at this stage, as well as a risk of potential lawsuit. So over recent years, we've seen a growing trend with privacy class actions. There's over 100 cases pending, and usually they either result from a security incident. So we've seen, the hacking with Desjardins, Capital One, and so on. And then in some cases, they result from a privacy intrusive practice. So in the case of open banking, it could be a firm that went a little bit overboard, pushed their luck, exchanged data, did not get meaningful consent, and so on. So although the risk of fines is very low and privacy regulators have limited enforcement powers, things are about to change. So I'll be talking a bit more about what the legal privacy risks are in that space.
Thanks so much, Éloïse. And I think it's interesting that Canada is achieved sort of this Goldilocks position. Not too hot, not too cold. We're sort of in the middle of this UK.
Balanced.
Yeah, oh, there's a better, yeah, very nice. And obviously your focus and attention on risk and sort of the underlying laws around privacy. So we appreciate your perspective and look more to dig into that in a little bit more detail. Christine, last but not least, love to just get a little introduction for the group and some background. And I think sort of we were kind of, as we talked about this, we wanted a bit of perspective about, how did open banking or consumer-directed finance become a thing? There's so many stakeholders involved. There's so many people that have an interest in this space. What was the catalyst or driving factor that you would say is moving us forward, and where's the energy coming from?
I think it's a great question to ask for sure, and I'm very happy to be here. So good afternoon, everyone. My name's Christine Day. I'm the Chief Information and Technology Officer for Questrade Financial Group. And I first kind of stumbled across this mostly just out of curiosity. I was starting to hear, the term a little bit, and this was a number of years ago when it was just starting to gain some momentum. And when F-data started broadening beyond, beyond its roots and started to kind of have more of a global footprint, and a North American chapter opened up, Questrade was one of the early firms to join and become part of that conversation. But in terms of what's driving it, I think there's different things driving it in different countries. I mean, there is quite a lot of conversation around open banking, in different areas of the world. And it has to do, with how it's gaining that momentum in each jurisdiction. So, for example, we've talked about its origins in the UK. I mean, that came about because the Competition Bureau in 2014 was looking into why consumers are not engaged in the market, and they found that switching is difficult and there's no price transparency and people don't know how much services actually cost. And so this is how they went about looking to solve that problem, and then being able to piggyback on other things that were happening in the market, which was PSD2. And so, in areas like Australia, it's also, very much, led by the government through the introduction of a law, right, a data access, privilege. And so in Canada, I would say it's not consumer driven. I would say it is consumer advocacy driven, meaning that, all of those who have a big voice on the topic are looking to provide better outcomes for consumers, more choice for consumers, more competition, in the marketplace. And that includes, the people in the federal government who are actively looking at it, and, certain regulatory bodies that are actively looking at it. But I think it's also very true of all of those who choose to spend their time propelling it, myself included, are really doing it through a consumer advocacy lens.
Thank you. That's great perspective, and appreciate you being involved on our panel today. I want to switch gears and talk a little bit about maybe benefits to the consumers. Obviously, there's a lot of that embedded in this. Éloïse, I want to turn it back to you quickly on this topic. And I know you talked about privacy and sort of the choice or the ability for consumers to grant or deny access. And I don't want to get into the technicalities of that, but maybe if you could just talk about how that's changing our view of privacy and rights of the individual, and maybe some of the perspectives on whether there's pitfalls in that kind of approach from the consumer's standpoint. Oh, you're on mute.
Sorry about that. So at the end of the day, open banking involves the sharing of consumer data amongst banks, financial institutions, and third-party financial service providers. So this means that you have an ecosystem where you have different players involved, that would have electronic access to consumer data, which is sensitive data, right? Financial information is usually sensitive. So I guess that's an issue that can definitely open up firms for liability under privacy laws. So in terms of the main legal risk, definitely we can think of data security issues, right? More data being shared in a standardized format clearly the greater is the risk to this data. So open banking approaches have to minimize those risks and take those risks into account. Firms will have to make sure that they use proper user credential system to verify that they're interacting and dealing with the right consumer. So they have to make sure that they can verify their identity. So aside from data security issues, I think one of the main issue when we talk about access to data is going to be around accountability. So different parties involved in an ecosystem, it can be sometimes difficult to determine who's responsible for what. So depending on the firm's role in the open banking ecosystem, a firm may have different obligations under privacy laws. So basically you have two types of role. So you're either a data controller or a data processor. So I'll provide quickly some more insight on what these roles are, because I think when we talk about access and liability, it comes down to whether, which hat you're wearing, basically. So a data controller is a legal entity that has a business relationship with the consumer, usually directly with the consumer. Usually they have a contract in place, so they are said to be in control of the consumer data. So when you're a data controller, you're responsible to obtain meaningful consent from the consumer. So perhaps you're the one who needs to do a background credit check. You're the one who needs to inform consumer on the type of sharing taking place, of any cross-border transfer taking place, and so on. If you're a data controller, you're also responsible to grant consumer access to their data so that they can update their data. And you must ensure that consumer data that you are using, data that is quality data, meaning that it's up to date, especially if it's going to be used to determine if the consumer is eligible for certain products or services, basically. So if you're the data controller, you're responsible to notify a customer if there's a security breach impacting their information. And if you're sharing their personal information, you need to make sure that you're authorized to do so. And if you retain a service provider, you need to have a contract in place. So you're in the driver's seat if you're the data controller, and you're highly responsible. If you're a data processor, it's a little bit different. So if you're a data processor, you're wearing a different hat and you're a service provider to another legal entity. So you have no direct relationship with the consumer in some cases. In many cases, you're behind the scene. You're just providing, helping another entity providing a service. So you're only authorized to use consumer personal information for purposes detailed in the contract that's in place. So if there's a security incident, your obligation is to report it to the data controller. It's not your responsibility to inform regulators or the consumer. So because these two different roles trigger different obligations under privacy laws, I think one of the main issues in open banking when we think about privacy and liability will be to properly document each party's responsibility and ensure that the flow of personal information matches the contractual framework in place, so that if there's an issue, it's clear who is responsible for what. I think this will avoid a lot of headaches.
And clearly ensuring that the consumers have some awareness, and again, not be confused or overwhelmed to know who's involved and what parties are involved in this in the flow of information.
That's exactly right. Yeah.
Steven, I'd like to turn it over to you, and because you've got such an interesting and broader perspective of the space, leading the advocacy and views of maybe other North American institutions, could you just speak quickly about what kind of benefits have come in other jurisdictions? Because obviously Canada's not there yet, but what benefits you've seen in other jurisdictions for both consumers and the financial institutions that are into the or embracing these concepts within their businesses?
Yeah, happy to do it, Scott. So first, before I answer directly, Scott, I guess the first thing that I would say is I think there's a bit of a pitfall in presuming that a transition to open finance in Canada or to CDF in Canada is, pick your metaphor, opening Pandora's box, letting the genie out of the bottle, whatever metaphor you want to use. The truth is the genie is already out of the bottle today. So just within FData North America as member companies, our companies serve about going on 4.5 million Canadians. And these are not financial institutions. These are fintechs and data aggregators. So there's uptake of these tools today as we speak. And so the benefits from the tools are wide and they're varied, right? There are things like Christine mentioned, better price transparency and more competition. But there are things like better financial access. So think about the cash flow underwriting model, where a consumer might not be credit worthy under the traditional credit bureau model to get a loan, but if they permission access to a lender to see 6 months or a year or 5 years, whatever the right time frame is of their transactions, perhaps they become much more credit worthy, and now they are able to access loans. The benefit, though, of transitioning from a closed banking system, which is where I would argue Canada and frankly the US both are today, to an open finance system where the protections are in place the way that Éloïse just articulated them. There's clear consumer and customer disclosure and understanding of what the protections are. There's a level playing field where, regardless of who I bank with, I have these opportunities to use my own data to my advantage. Are just that, right? You are protected. Whereas today, if you're a Canadian customer and you grant access to your bank account, the terms and conditions of your bank account typically will say that if there is some type of negative action, you've lost money somehow, there's been a data breach, that you are responsible for that because you granted access to your account. So that's the first. The second is user experience and user flow. A well-executed, well-designed customer-directed finance system provides for a uniform experience regardless of what type of third-party provider you're using, regardless of who you bank with. But there's also, and you alluded to this, Scott, there's quite a bit of upside to the financial institutions themselves. And it's very interesting because in each market where these conversations have evolved over the last 6, 7, 8, 9 years, the kind of, as a general rule, not any independent institution, the immediate reaction from incumbents is to guard against this evolution because it's going to open up more competition. But over time, what ends up happening is the kind of more forward-thinking financial institutions will realize, wait a second, who is best positioned in terms of resources, technological capabilities, existing customer relationships, scale, to actually offer these types of technology solutions to your customers in a way that can broaden and deepen the relationships that we have with our customers. It's not fintechs, it's the financial institutions themselves. And we've seen that in the UK, we're beginning to see that in Australia. And so there are significant benefits, not just to the fintechs, not just to consumers, but also to the incumbents as well.
Thank you for that. And I think there's an interesting irony here. You touched on the fintechs and the incumbents, and in a market like Canada, where we have an obvious concentration of wealth and assets in the hands of a few small number of firms, there is a time to market and innovation advantage that lands squarely on the smaller, more nimble firms who agree to get and embrace some of these concepts because of their size. And I think that, again, in a market like Canada can lead to a leveling of the playing field or new solutions or new kind of capabilities to attract and grow business. I think that's particularly interesting for members of IIAC. We have a cross-section of firms represented and other participants here, but I think there is an opportunity to see this as an enabling technology, as an enabling idea, and not just wait for it to happen to us, but actively participate in making it happen. With that, Christine, we talked just prior to jumping on here about attending conferences and in your role both with Questrade and as part of the Advocacy Association, you must see a lot of examples of, I'm going to say, cool stuff, things that other countries are doing, things that fintechs are talking about. And probably for people like me, it may seem like science fiction, but maybe if you could just share a couple of examples of things you've seen as really, truly innovative, and maybe not ready for prime time in a country like Canada, maybe nowhere, but have you seen some really interesting concepts that leverage the power of open data, the power of open finance, that would kind of get us excited about a future?
Yeah, sure. And I would actually just take the opportunity to broaden it a little bit in that, when you look globally, and as a technologist, I sometimes am looking at these things through a little bit of a different lens, but when you look globally at where the most innovative marketplaces are. Like, don't even just limit it to financial services, but look at where, you know, where there's some really kind of transformative innovation happening. And particularly in any of the functions where there is a regulatory element, so be it kind of healthcare, be it you know, transportation and self-driving cars, be it financial services, what ends up happening is the time that it takes for a country between when there is that technological capability to produce an innovation and the policy to put in place so that the society can really benefit and consume from that innovation. That duration is really what dictates you know, a country's kind of role in the digital economy. And so what worries me for Canada is that that time frame from capability to policy is really lengthy, right? We're really slow. And as such, we're falling behind. And so when I look at you know, financial services and what's happening in different areas of the world, it is obviously very, very data driven, right? Data infrastructure underpins the knowledge economy. And, you know, there's all kinds of things from hyper-personalized offerings to where, you know, it's not about, you're not looking at target audiences, you're not looking at segments, but you're actually looking at an individual, right? What kind of specialized pricing can you do for an individual? You know, what kind of personalized advice can you do en masse but do it at so cost effective because you're leveraging things like machine learning and things like, you know, other emergent technologies, all of which are underpinned by data. So there's a lot of very, you know, interesting things. And I would say that the theme across all of it is this notion of putting an individual front and center, acting in that individual's best interest, and leveraging data at scale in order to provide these kind of hyper-personalized offerings.
So I could see effectively at a transaction level credit offers or different ways of financing, you know, come at me in the way that Amazon sends me, hey, people that bought, you know, this product also bought this thing over here.
But not meant to, you know, but not doing it with the sense. I mean, in the Amazon context, that example is about, you know, how do I entice you to spend more, right? This, when done effectively and done particularly in financial services in a manner where regulatory bodies would be supportive, it has to be truly, you know, best interest driven, right? So, you know, offering the same kinds of capabilities and access that people may have if they were ultra wealthy, but making those things and democratizing those kinds of value propositions for the average individual.
And
right.
Scott, if I could just to piggyback on Christine's point, unfortunately, we had a bit of an interesting kind of beta test of what the system looks like when it's all digital over the last several months because of COVID and the pandemic. One of the lessons learned is, look, obviously, I think we're all drawn to kind of the sexy, cool, you know, most technologically advanced solutions. One of the lessons from COVID is a benefit of customer-directed finance is the ability to provide very foundational traditional banking services to more customers that are not served by the existing system. And there are many examples of this, but one that I would point out is the very, 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 very small business community, right? So the not even one employee, just the sole proprietor who might not have sufficient assets to have an account at a financial institution, or might not even have a business account. They're just running it through their consumer account. And what we learned as an ecosystem coming out of the crisis is that's a real gap in the existing infrastructure. And that's a focus in other countries that the FinTech community has been able to serve successfully. So I think there's two sides of it, right? It's not just like, what are the cool new technology, shiny toys? It's also, how can we expand access to folks who otherwise might not have access?
Thanks, Stephen. And just a reminder to folks participating or attending today, the Q&A is open, and we'd love to hear from you. I do have a question that popped up there, so I'm going to ask that. Stephen, I think I might start with you, but I might spill over to you, Éloïse, as well. And it's a question about particular of interest to the wealth business, the kind of broker-dealer community that we support. You mentioned payments is what drove open banking in the UK, and that's interesting and certainly active. But our members are really interested in terms of what kind of data is accessible or available in an open banking or CDF environment. Is it point in time data like balances? Is it transaction histories? Is it calculated or kind of inferred data? And maybe the point after you, Stephen, to Éloïse, is there different legal requirements when the data goes beyond maybe a point in time piece? So Stephen, maybe in different jurisdictions, is their data set common in this world, or is it evolving? And Éloïse, what does that mean for the firms that are giving up that data?
Yeah, Scott, this is a foundational, critical question as we think about what customer-directed finance looks like. The very kind of glib, tongue-in-cheek answer is we don't know yet in Canada. And this is very much in line with what Christine just said, between when the technology is in place that the market could deliver some of these benefits, but before the rules of the road have been delivered to the market. So we're awaiting policymakers to define what is in and out of scope in Canada. We have two sides of the spectrum. In the UK right now, it's currently just payment accounts with a view towards going to kind of all different types of accounts in the future. In Australia, on the other end of the spectrum, there is essentially a complete customer data right, which is beyond even just financial services. The view that we've articulated as FData and our member firms is that government should be as expansive as possible in defining what is in scope. And what we're trying to avoid is a scenario in which a customer has different protections or different potential opportunities based purely on what type of data they're interacting with. So said another way, why should I have some liability protection if something goes wrong if I'm using a payment service, but lose that type of protection if I want to use some type of robo-advisory tool, as an example. Our view also is that, look, there are a ton of elements of customer-directed finance that the market itself can deliver. The market can deliver technology. The market can deliver solutions. What it can't deliver is consensus on what should be in or out of scope, because fundamentally everybody in the market has a commercial interest in defining what that scope should be. Only government can have the customer at the complete center of their conversations. So we've argued that Canada's journey should look much more like an Australian CDR in the financial context than it should like a UK payment account only deployment. And the rationale for that is, we're seeing this in the UK, it's expensive and time consuming, and you lose quite a bit of efficiency if you have to go back every couple of years and expand account types rather than just taking a bite at the apple at the outset. The other thing that I would say, Scott, before Éloïse, I'm sorry, I'll turn it over to you. There's been a lot of conversation in other markets about another very important question, which is at what point, I think our view is transactional data is the consumer's data, is the customer's data. But at some point, perhaps when analytics have been applied to it or other types of proprietary processes have been applied to it, at some point that's no longer the customer's data. That belongs to the firm that's applied those analytics against it. And so in any definitional scoping of what Canada's journey looks like, there has to be a very clearly drawn line to delineate what that looks like. And our view is anything aside from just the raw data becomes something that's proprietary to the firm that's created it.
Great. Éloïse, do you want to add anything just to that?
Yes. So basically, privacy laws regulate personal information. So in the US, they use the term PII is the same thing. In Europe, they use personal data is the same thing. So it's any information that relate to an identifiable individual, not identified, identifiable. So it's a very broad concept. And privacy regulators have usually take the position that any piece of information qualifies personal information. So that's that's the kind of the table. Now, there are a lot of gray zones when we think of business analytics. More and more businesses are creating consumer scores, profiling consumers. So is this still personal information? Do you have to, explain to the consumer exactly what you have about them and how you build your algorithm? There are tons of issues. So there's still some gray zones. The good news is that regulators are aware of this. So in some case, they're saying, for instance, anything that's when we talk about data portability rights. So the right to have, your data in a portable format. You can take your data and go and see a different firm. Does that include inferred data, that could include, proprietary data? And the answer is no. They're saying no, it should be just like basic, financial information or consumer data. It shouldn't be data that includes some intellectual property or an exercise from a specific firm. So that is going to be interesting. There's a lot of misconception that, as a business, if I've collected the information and I have consent, I own this data. And it's not how privacy laws work. The consumer is always the owner of their own data, but at some point, when there's been some, algorithm applied to the data and it's been, massaged, it becomes a little bit gray. So it's going to be interesting how privacy laws evolve, to take into account, business analytics and so on.
Thank you. Christine, I think I opened a can of worms with my Amazon comment, and I know you had a view on that, but there's a question here, and it may ultimately spill back to you, Éloïse, as well, but there's a question here about services, and again, you may have seen or had some visibility into this, services where a consumer is presenting their data out for bid explicitly, like, here's my situation, what can you do for me? And I'm just wondering about how the advocacy groups feel about sort of that type of consumer empowerment, but maybe some negative consequences, and also whether the aggregator, the data users, like the processors or the users, have to be regulated in some way. If I put my bid out, I need 10 grand for a car loan. Is that my risk that something bad happens? And so just that idea that the consumer control in an auction type mentality, what does that do for the consumer? And is there more regulation that's needed or less, or examples of where it's gone well or badly?
Okay. Yeah, I would start by saying there's really no discussion of how to enable consumers to monetize their data for their own personal benefit. Like, that doesn't have a place in the open banking conversation, at least not that I've heard in any way. It's really more about how to put them in control of their data, to make it really clear who that data belongs to, that it does belong to the customer. It doesn't belong to any institution that happens to be holding it, on behalf of a customer. And their kind of rights and controls around that. So certainly it hasn't been about how to monetize. The second part of the question around, what would be if there's a series of different entities that are now kind of essentially holding the same data, would they need to be regulated in some way? Would they need to have some oversight? And certainly the answer is yes. And that's the approach that was put in place in the UK as well. So every single one of those, fintechs or entities that was going to participate and play a role in that open banking framework would need to go through a process to become certified, to be registered as an active participant in that framework and community, and therefore have oversight. And so one of the challenges in terms of getting momentum in Canada is really a conversation around where might that reside, right? So because our regulatory framework is fairly fragmented, and because we regulate by type of firm and not necessarily by the function the firm performs, it makes it difficult to determine is this some new entity that needs to be created specifically for this purpose, or can it live somewhere in one of our existing entities?
And I've got a quick one here, Eloise, that might also, I think you touched on before, but maybe related a little bit to this topic about consumer right and privacy. And the question, you know, is in the current environment in Canada, can a consumer explicitly request access be given to another provider? For example, you know, an independent wealth manager or financial planner with consent. Is there a mechanism for that consumer, that firm, to get access to the consumer's other data at a bank or insurance company or somewhere else? Or is that just not even sort of available or allowed?
The issue with our laws is that everything revolves around consent, is the only legal basis. So in Europe, under the GDPR, you have other legal bases. You have, you know, if there's a contract in place, if there's a legitimate business purpose, so that's another legal basis. So there's more flexibility for data being exchanged other than, you know, having to run after the consumer consent. So in Canada, they are pushing to update our laws. So in Quebec, they've proposed a bill. And at the federal level, also, we're going to be seeing some changes. In Ontario, there's an ongoing consultation to have a provincial law. So I think the industry needs to push for other legal bases than consent.
Okay. And as you said, or maybe Steven mentioned this before, today, some of the fintechs, as the way they operate and function today, they may actually be putting the consumer into a breach or exposing them to liability because some of the institutions have taken a blanket approach. If your data, if your authentication credentials are given up, you are liable for any bad things that happen.
It's your responsibility. Yeah.
Yeah. So
yeah.
That's a big challenge. I understand why those defenses or statements are being put out there because this is evolving so quickly, but it sounds like that's an area where we have to, you know, really get some understanding to not just say that open banking or consumer directed finance is a reality, but to make it work.
Yeah.
On that topic, and I know I'm watching our time very carefully because I know how busy it is and people just can get a bit of fatigue from being on Zoom. I would like to see if I can wrap us up about 5 minutes before the hour. I do want some closing comments from everybody. So I'm going to ask one other quick question. And Steven, I'm going to start with you again, just because you've got some perspective in other jurisdictions. You know, what do you think the biggest challenges that we face from adopting and advancing these policies in Canada are today? What are the things that are holding us back or preventing us from moving forward?
Yeah, so Scott, I think I'll just kind of go through some of the challenges. I don't know that there's one that I can kind of pinpoint. And by the way, I should say I'm not pessimistic about Canada's future here, but there are some headwinds. So first and foremost, look, the Canada's financial regulatory schema has historically been incredibly conservative, and conservatism in that regard has been a sense of pride going back, you know, through the financial crisis. That, you know, staying the course and being conservative has allowed Canada to weather the storm much better than other countries in the West did. So that's one. Christine put her finger on another one, which is the regulatory fragmentation. And I think as a common theme that you've heard from all of us is, for this to work, there has to be a uniform deployment across the board, and regulatory fragmentation, provincial versus federal fragmentation, that's going to make that difficult. The third, and Scott, you mentioned this, is really the consolidation of large financial institutions in Canada. You juxtapose that to, for example, the United States, where you have thousands of financial institutions, certainly some very big ones at the top. But there is inherently more competition within the financial sector in other markets than there is in Canada, which creates more differentiation amongst incumbent players with regard to their posture towards customer-directed finance. The last, and frankly, the one that I think is the most surmountable, is the technology challenge. And that's one where there already is work being done to move away from credential sharing, what we in the industry refer to as screen scraping, and towards more secure ways of authenticating customers that don't revolve around sharing your username and password. The challenge there, though, in our view, is not a technology challenge. It's a mission creep challenge, right? And so the biggest concern that we have is, in the absence of government setting the standards for data that's in or out of scope, account types that are in or out of scope, what the opportunity and protections are for consumers, that industry, in trying to just move away from legacy technology to new technology, inadvertently creates policies around how this all works, which could threaten the competitiveness and the openness and transparency of the new system. So very optimistic generally, but there are some challenges.
I appreciate your optimism. You know, Éloïse, I'm going to just comment on that. And I think Christine, you made the comment about, if there is that kind of ecosystem and environment, innovation will rapidly take place from a technology perspective. You know, there clearly is some demand and benefits that people can point to. So again, I really appreciate the optimistic view. I'm a bit of a pessimist. I'm a Canadian, you know, it's getting close to winter. But no, that was really, really good way to start it. You know, Éloïse, do you think the government bodies are focused on this? You touched on Quebec advancing it. We have 13 jurisdictions in this country, plus a federal government, you know, plus a number of other burning priorities right now. Is the political will there? Is the is the inertia or momentum in place to help us advance this from to create that really important framework, that foundational framework for this to happen?
Yeah, so from a privacy regulatory standpoint, I would say that it's on the government's radar, basically. And I think the main issue for that should be on open banking firms' radar is really the introduction of a data portability in our privacy laws. So in Europe, under the GDPR, they have this right, data portability, and it's the right of a consumer to receive a copy of their personal information from a data controller in a commonly used and machine-readable format and store it for further personal use on a private device. So we don't have this right yet in Canada, and it's relevant because open banking in many ways is giving consumers data portability. The concept of open banking is to put consumers at the heart of controlling their personal financial information, which will be standardized and interoperable across financial institutions. So the good news is that this individual right is included in the recent Quebec proposal, as I mentioned, and it's getting some traction. Under the ongoing consultation in Ontario, which I believe closed at the end of the month, maybe early October, the government is also considering implementing this right in their new provincial law. Also at the federal level, the Privacy Commissioner has came out and said, maybe we need this right. So I think the industry needs to get involved and make sure, it's kind of a good timing to impact the evolution of the legislative framework in a way that will support the open banking industry, kind of pushing to have that as a legal requirement, so that businesses are set up in such a way that open banking is can take place, basically.
Thank you. I'm going to go around the table now just quickly for some last specific comments. I'm going to start with you, Éloïse, and besides calling your lawyer or partner at BLG to get an understanding of this, because I know that is the best advice we could all have. What would be the second best thing somebody in the industry to do today from a legal privacy perspective, just to kind of get themselves thinking about this or assessing their readiness for this? What should dealers do today if you had to give them one piece of advice?
Well, if I had one advice, it would be privacy by design. Okay. And basically it will soon be a legal requirement. So businesses have to ensure that parameters of their technological product or services provide the highest level of confidentiality by default, without any intervention of the consumers, basically. So when you're developing an open banking framework, I think firms have to consider a few questions when assessing the adequacy of their privacy safeguards and embedding privacy into their design. So are privacy requirements and consumer expectations being considered early in the design of the open banking solution? Do you have a privacy impact assessment process in place to evaluate the risk? Does the data ecosystem balance transparency, security, and fair value exchange? Are you comfortable that the consumer's data will be used in a complete, accurate, and up-to-date, do you have the capability to record the consumer consent, including the purpose and the time frame for which data is shared? Maybe a last one would be, do you have in place a process to assess your open banking framework against privacy compliance requirements and consumer expectations, because under our privacy laws, there's a reasonableness test. So even if you have that consent, there's always a risk that there would be a complaint and a privacy regulator would say, we don't think this practice or this business model or this technology, the way it was set up is reasonable. So you always have that risk, so.
Okay, thank you. Scary stuff. Christine, you really occupy a unique position here, both as an advocate and participant in this process, but also as a dealer member, like many of us on the call today. Can you give us some closing thoughts on any practical advice for dealers, maybe wearing both your hats per se, but what should we do as dealers in thinking about this space and open banking as a concept?
Yeah, absolutely, Scott. So first, I would echo Éloïse that having your house in order from a data architecture and a systems perspective is a good foundational preparedness, because when this does evolve, and I'm optimistic, just like Steve, when we do bring this into Canada, there will be work to be done to make that data exchangeable, right? So to comply with the technology side of it, which, while it is the easiest to solve for, there is also quite a bit of effort still involved. And that exercise of bringing the data in, but also making the data available through the open banking channel will be that much more difficult without having that strong foundation. So I would kind of echo Éloïse strongly on that. The other thing I would say is, embrace it as an opportunity, right? So in the same way that in other jurisdictions, maybe that time frame from I'm threatened to wait a minute, this could be an opportunity, to learn from that, which has repeated itself in multiple jurisdictions, and really start thinking about what would I be able to do? How could I better serve my customers? What would be some unique things that I might be able to do that I wasn't able to do before? If I had that kind of holistic view, right? And recognizing that there has to be a really clear data value exchange, right? So the customer won't consent to give you that information unless the value of what you are providing is significant enough to warrant that exchange, right? So really, start to have brainstorming sessions within the firms about what are some of the possibilities. And I would also strongly encourage to look in other areas of the world where more interesting things are happening, and start to kind of develop a bit of a global perspective, because financial services is evolving very rapidly, and Canada is not at the forefront of that evolution.
Thank you, Christine. Steven, last word to you. Advocacy is what you do. You've got this great perspective. You've touched on a couple of concepts already about things that we should be thinking about, but as an industry in Canada, what do we need to do now to advance, to kind of increase the volume, sort of amplify the message and move us towards this brighter future?
So Scott, Éloïse and Christine gave very good, kind of thoughtful, kind of strategic advice. I'll give just very practical, tangible input, which is this. The Department of Finance completed about a year-long first phase of an open finance consultation earlier this year, when they released recommendations, or when recommendations were released to the Minister of Finance, and those were made public. The department is now in the process of undergoing the second phase of that, which will become more public in the weeks and months ahead this fall, which will culminate in recommendations to the minister on how, what are the details around Canada's customer-directed finance journey? What does governance look like? What data should be included? What are the protections that customers should have? What are the opportunities? So my advice is very straightforward and very simple, which is just get engaged with that process. The Department of Finance has been incredibly thoughtful and intentional at trying to have as many stakeholders be part of these conversations over the last 2 years as possible. That's not to say that there's not room for more engagement. And I really do believe that we are having conversations now that will dictate what this ecosystem looks like for years and years and years to come. And so, not to overstate it, but I think the most pragmatic advice I could give is be part of that conversation.
Well, thank you. And what a great way to close and segue, because I want to say thank you. It was to Éloïse, to Christine, and Steven for being part of this conversation, for giving us some perspective, some insights, and some great practical advice. I strongly encourage all members here participating to think about what the IIAC does for advocacy on your behalf. Think about joining the subcommittees, participating and attending these webinars, because it's a great opportunity for us, even though we can't be physically together, for us to be thinking the same way and driving new ideas to advance our industry. And as Christine said, maybe catch up or make up some room for areas that we're behind. Thank you as well to Annie and Susan for your support of the FinTech subcommittee, and appreciate your participation today. Hope everybody enjoys the rest of this week. Thank you.